Good morning, traders. Chris Buss here with your morning look at markets for Monday, May 10th. Okay, I hope you guys had a nice weekend. I hope you did something special for your mom. My mom wanted a southern barbecue, so I did a couple racks of ribs, some southern potato salad, cornbread, the whole deal, and she loved it, so she was happy. I hope you remembered your mom and took care of her and everything worked out well. Okay, let's take a look at the markets. Large caps are flat. NASDAQ and small caps are fractionally red. Copper's again up big, 2.6%. Iron ore is limit up. Gold is up about 0.3%. Silver up 1.2%. Looking ahead to things on the economic calendar this week you may want to make note of. China PMIs come out overnight, so they'll be hitting the tape tomorrow. Wednesday, we've got Atlanta Fed inflation expectations. That's probably going to be a closely watched number. And then on Friday, we've got a lot of information coming out. Retail sales, industrial production, business inventories, and consumer sentiment on Friday. So those will be a lot of important data points coming off the big jobs miss of 266,000 on Friday compared to a whisper number around 1 million. So some interesting reactions on Friday. We'll talk about that a little bit today. But one thing I want to start off with here is coal. Probably a forgotten commodity for most of us. I think, all the talk about the greening of the world. Coal is obviously a dirty fuel, but China and other third world countries are building coal plants like there's no tomorrow. And as the economy ramps up here, metallurgical coal for making steel and other stuff, the demand is going to pick up there. Let's look at Arch coal on the weekly chart. Now, Arch was up 15% last week, and I think the chart's setting up for something that could potentially be very interesting. Of course, we got the plunge last year, and now we've been building a base for a year, caught under this resistance level at 55. You can see the air pocket above 55 where there really were not many trades at all the way up to 70. What I think would be a good idea is to alarm this 55 area and be ready to take it long if we get a breakout above there, and then we can camp out in that position and see if we can get a move up to 70. That would be a really nice trade. BTU is actually, well, obviously it's another coal company, but I think it sets up for potentially a quicker reaction than Arch. So let's put that on our radar as well. This was back in 2018 and 2019, a $40 stock, went all the way down to 1, has been basing below this, let's see here, 530. You can see this is actually the 65-week moving average right here. But you can see the giant volume over price bars, all the trading that's gone on here, and then there's a relative void, and then even above that there's even less price action. So what I think would be prudent at this point is to alarm wherever you want to get interested, 530, 550, something like that. Once it clears this moving average and this volume over price resistance, I think you're going to see or at least the door is going to open. I'm not going to see, you're probably going to see, but the door will be open for a move up to 11. And that would be, you know, I mean, if it goes the way I think it would go, I think it would be a fast double. So alarm 550 and be ready to take it long. And the way I would do this, remember we're on the weekly charts, just go out in time. I mean, go out to July, go out to September, go out to January of 22. Have that be a position that just grinds away in the background. Of course, you want to go ahead and put your stop in, you know, say down here at $5. So you got 50 cents of risk, something like that. And then once it breaks out, then you can raise your stop up to the to this moving average here. Once you get profitable in the position, you can trail your stops up if the stock starts taking off. I wouldn't get both of them. I mean, you know, diversify your commodity exposure. You know, if you've got some copper, if you've got some grains, we're in some steel stuff. So I don't think you need to, you know, go crazy loading the boat on coal. But I think these charts are set up really well to pop. And also, BTU has a new CEO, so he may stir things up some as well. So there's an additional catalyst in BTU. But anyways, I like the way this chart sets up, and I think you should put them on your watch list. Moving on to SPY. SPY, remember we had a couple day sell-off. We found support down towards the bottom of this trading range and now have popped out, recaptured this 2-hour uptrend line. So from a technical standpoint, I mean, we're in blue sky. You don't want to see price come back down below 420, but as long as it can hold that, I think the bulls are in control. Here on the SPY 30-minute, we see some clarity in the structure, and to me, this looks like a bull flag. We had an impulsive move off of 416. We came up to 423. Then we spent a couple of days oscillating between 221.50 and 423. You get a breakout above 423, and that triggers a buy with a measured move up to 428 from this bull flag. So if you're not in it, I think you can either buy on the breakout, or if we pull back to 221.50 and hold it, I think you can buy there as well with a stop just below. If price were to come back below 420, you're probably going to come back in here to 419 and see if this channel holds. But if it loses this 418.50 level, which was important all the way back here, then it would look like a failed breakout kind of setup. Qs doesn't look anything like SPY. I think money continues to come out of the Qs with interest rate worries, and a lot of the high flyers continue to sell off. We had the deeper pullback here. We got a double bottom and then a bounce up into resistance where that failed on Friday. We have a little gap here that has yet to be filled. So for today, I think 337. We can look at it here on the 30-minute chart. I take that back. 336. If you were to pop this downtrend line and pop 336, the door would be open then to 337 and higher. But until price can prove it, I think you want to either hold off on piling in long or try some tactical shorts if it looks like the Fat Man complex remains weak, which I expect it will, and then possibly come back and fill this gap down below that has yet to be filled. So I think the Qs remain weak, and I think it would be a tactical mistake to try and front run these resistances, because until it pops it, I think my default position is it's not going to get through. So I want to wait for confirmation. Now, if price pulls back, all the way into 330, and it looks like it's going to hold there, then that's a different deal, because then you can play for $4 or $5 on the upside just for a bounce, but still be below the downtrend line. But up here, no, I think it heads lower. IWM, here we did have the breakout. You can see last week we had the downtrend line, and then we popped up above. We said you could get long at 223. That turned out to be a nice trade. Came up into 225. I'm calling this gap filled. We had that reach up candle. I think it was 5 cents short, but I don't think that's going to have any material impact. I think today, as long as we can hold this 225, I think we can drive higher. Certainly a break above 226 is a buy. Looking for 228. That would be like right in here. But if we drop below 225, then we're back into 224, 223, and possibly 221. But we have broken the downtrend channel, so that's positive. And I could easily draw a bull flag around this structure. Here's your flagpole. Here's your consolidation. Get a break above 226. That would be your bull flag breakout. And if we extend that measured move, you'd be up in here into the 230s. And then, we'd be off to the races. And remember, this is where a lot of your cyclicals lie. Your regional banks, travel companies, Carnival Cruise Lines, all this kind of stuff. Hotels are in the small cap index. So I expect those will continue to do well and outperform the Qs. Before I go much further, if you're new here, thanks for spending some time this morning with me. I put a lot of work in on these levels, so you don't have to. If you work on your execution around these levels, I think your trading will improve dramatically. So if you appreciate that kind of work, hit the subscribe button and the alarm bell. That way you won't miss a beat. And if you want to go the extra mile, jump over in the show notes. There's a link to register for all my content where you'll get everything midday, and wherever I send out content, you'll see it in a nice, neat package, and you'll get an invite to our trading room. And it'd be great to have you join our gang. There's a lot of stuff that other guys see that I don't see, and that's always helpful during the day or even after hours, finding tickers you never heard of where there could potentially be a trade. And of course, longtime subscribers, I really appreciate you being here. Hit a thumbs up and send a link along. Give me a nice positive comment so you can let others know that you're benefiting from the work. Okay, Facebook. Gap up on earnings, fail, came down to 313 at this prior high, put in a double bottom, bounced up, but was rejected on Friday at this 321.61 level. I think that's still your pivot point. If price can break back into the prior trading range, your target is going to be 330. But if it can't, then your target is back down to the bottom of this range at 313. So either way, we're pretty close to that pivot point, and those are, $7 moves in either direction. So getting that right on Facebook could be a really nice trade for you. Apple, even though it was up 69 cents, pretty weak. I've dropped in a downtrend line off the recent highs, and this 131.50 area is going to be what I think is going to be stiff resistance. It was support here, 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 2 times here. So all that is now resistance. For me, short term, I wouldn't take a long until price can prove that it can break above 131.50. And then you've got an opportunity to get up to 135, which would be a decent trade. But while it stays below this downtrend line and stays below 131.50, I think it's either a no touch, or if it loses 130, then if you want to take a tactical short down to 128 or 127, then I think that would be the trade to make short term on Apple. Tesla, not doing a whole lot. The ARC complex, the Cathie Wood complex, remains under pressure. Tesla is one of her bigger holdings in that ETF. So when she sells, she's essentially selling Tesla as well. So Tesla has been, pretty soggy here lately. If you're having success, trading around this 670 pivot, by all means, continue to do so. But for longer term swing traders, I think you got to wait until you see some more positive price action. A breakout of this channel, a break back above 710, which would open up 725 to fill this gap on up to 750. But as it stands now, we're in this steady downtrend range, and we're kind of right in the middle of it. So I would be inclined, if you're trading it and you fell below 670 and the NASDAQ looks weak and the ARC complex looks weak, I'd be more inclined to try and take a short at 670 and see if we get another tag of 650 or even come back down here to 625. That would be a nice trade. On the upside, unless you see something, really happening that looks compelling, I think it's going to run into trouble here at 690 and at the downtrend line. And that would be another location where, if price popped it, you could get long. But if it runs into trouble, you could initiate a short up here and look for a move back down to the bottom of the channel. Microsoft had a nice couple of days. Broke out of the downtrend channel, gave a gap up, but ran into trouble here at 254. I think 254 is your pivot. Above 254, you can look for 256. And then above 256, then you're in gap fill mode, looking for a move up to 262. While it stays below 254, your first target would be the top of the gap. Second target be the bottom of the gap. And then if it lost 249, then you're coming back in here to 246. Amazon, really soggy. Hasn't shown me anything really to the upside. If you've been having success trading these $50 increments, I think that's all there is right here short term. The price action has been really soggy. use 3,300 as your pivot. I mean, we're right there. Below, I think target's 3,250. Above comes up to 3,350. So continue to work those $50 ranges if that's what you've been doing and you've been finding success at it. But these $50 increments have effectively worked as pivots and overhead resistance and downside support. Google recaptured this prior trading range after the dip and the recovery. So I think right now you can use this 2353 as your pivot and then see if you can get some lift. Your first target is going to be 2390. Your second target is going to be 2430-ish, right in there at the top of the box. Netflix, false breakdown, pop back into the range. This 507 midpoint has been working as resistance all along here. Fake breakout, more resistance, breakout that failed, and back down to resistance again. So for today, I think 507.50 is your pivot. For longer term swing traders, below 500, and certainly if price were to break this 495 prior low, then you can get short and look for 470 on the downside. Had a couple of nice days in gold that I want to go over. Notice the nice rising RSI, nice rising momentum. We got the pop over the 200. We got the pop over 171, which was our next layer of overhead resistance. From here, 174 is a big level. And if you follow along on the gold futures index or track the physical metal, on my platform, it's dollar gold is the index. 1850 is your number, 1850 for the next level of overhead resistance. And if it were able to pop 174, then I think you come up to 180 pretty fast. And I think if you popped 1850, you're going to get a lot more FOMO, fear missing out, more people having their attention called to gold. Like right now, it's in stealth mode. Everybody's still talking about Dogecoin and Ethereum, and not a lot of eyeballs on this. So that's a nice setup as far as sentiment goes that I don't think a lot of people have piled in yet. But you start getting over 1850, and I think that's when you're going to start seeing, CNBC and people talking about it, and maybe get a lot of people that were not interested down here start piling back into it to give us a lift. Kirkland Lake, I got this, whoever's in it, got this nice pop above downtrend resistance and the 200. So from my perspective, the technical view is the door is open up to 43, and then that's where the next level of overhead resistance lies. You get over 43, and then that opens up a lot of upside running room. Rising PPO, rising RSI above 50. The technical indicators are supporting a higher move. Here's the regular gold miner index. We had said a pop above this resistance line would open up some room. We got that on Friday. Now you want to see that hold and get a move up to 39.50. Above 39.50, then I don't want to say it's gone, but there's certainly more running room above. Positive indicator looks on a rising RSI, rising momentum. Bull cross above the zero line on momentum. That's great. What you don't want to see on any of these is a back test that fails. Looking back at gold, you don't want to see it drop back below the 200. That would be like dropping below 1800 on the gold index. You don't want to see that happen, because then it would look like, this was a fake move. So you should be psychologically prepared for a back test of the breakout. We see that all the time, but you don't want to drop back down below. Just like on Kirkland Lake, you don't want to see this lose the 200. On gold miners, you don't want to see it drop below 36. But other than that, the charts look bullish. Here's silver, continues to advance. I think your line right here is 26.25. If it can pop 26.25, I think then it really gets some horsepower. If you're not in silver or any of the silver miners, I would alarm that level, 26.25, as being a breakout. Yes, there were some pops above back here that failed. This was when Reddit, all the Reddit guys tried to do a short squeeze on silver. That failed. So this is an anomaly. But I think if it pops 26.25, it's going to go higher. And then one silver miner we had our eye on was Wheaton Precious Metals. We've popped above this big value area here at 43.75. I think the door is open here to get into the 47s and the 48s as long as this 43.75 holds. So I think that's a decent setup on this silver miner if you want to take a shot on that. I don't have the silver miner index up for you, but it's SIL. And then you can also look at junior miners, SILJ or GDXJ for the gold, the junior miners. They're more volatile, but sometimes they can move more than the larger companies. So depending on your risk appetite and how those particular charts look, you may want to go with a minor index rather than an individual name. It just depends on how you want to trade it. That's mostly a personal preference. I want to wrap up here with the dollar. This is the euro-dollar pair. We had been watching this impulsive move from way back when. We had downtrend resistance. It popped it, came back, undercut the back cut or the back test here at 117, but now has popped up to 1.216. Whenever you see the euro dollar going higher, that is supportive of gold going higher. And we can see the reason why here on the US dollar chart. This was a downtrend for really all of 2020, was a steep downtrend. We got a kickback rally, which looked a lot like a bear flag. I mean, it took 3 or 4 months to play out. But you can see they really pulled the rug the last 2 days, Thursday and Friday. That jobs report had a devastating impact on it, down 0.8%. You can see prices coming into a support layer at, let's just call it 90. And then the prior low was at 89.25. If you see, or we see, the dollar break these support levels and not hold, that's really going to juice commodities. That's going to juice oil. That's going to juice gold. That whole complex. If the dollar breaks these prior lows, I think it's going to go bananas. I mean, it's already going bananas, but I think it's going to be going really bananas. So be ready on that. I'm not saying it's going to happen. I'm just saying if it does, we may see this come down. I expect this one to break at 90. But then down here at the bottom, you may see a month, 2 months of consolidation before it decides whether to hold or break down. But I think you should have those levels in your mind and on your charts so that we can, monitor the progress of the dollar. And remember, if the euro goes up, by definition, the dollar is going down. So that pair is important. You want to see the euro-dollar pair going up if you're long commodities and you're long precious metals, because that's an additional reflection of this dollar chart. So that's all I've got for this morning. Hope you have a good day of trading. And, as we always say, trade level to level. Generally speaking, just recapping, I think technology remains soft and out of favor. And we see that on the FATMAAN names, not a lot going on. All the names on Friday got rejected at key resistance. No power there whatsoever. But that can change. I just think that money is flowing out of that sector. Watch ARK, ARKK. Even if you're not trading it, watch how it trades. On Friday, when the Qs were green, ARK was very red. So that kind of tells you that those bubble stocks, those high valuation names are still selling off. We see that in Peloton. We had trades on that. Some of the other names, watch semiconductors for risk appetite. That would be another area to look to try to get a read on the Qs. Okay, let's wrap it up finally. This has been Chris Buss for Traders Profit Compass. Have a good day of trading and talk to you next time.